He once paid $276,000 for a dinosaur skull. That same year, the IRS quietly filed millions of dollars in tax liens against him. A few years before that, he had owned 2 European castles and a private island. He had a Gulfstream jet, 4 yachts, and more than 15 homes across the globe. Between 1996 and 2011, Nicolas Cage earned well over $150 million. He was, by every financial measure, one of Hollywood's wealthiest and most powerful actors. So how do you lose that kind of fortune in just over a decade? What psychological trap was already set the moment his first enormous paycheck arrived? And could that same invisible trap be quietly operating in your financial life right now? This is the documented, verified story of one of Hollywood's greatest financial collapses. By the end, you will see money and yourself in a very different way. Nicolas Cage was born Nicholas Kim Coppola in Long Beach, California in 1964. His uncle was Francis Ford Coppola, the legendary director behind the Godfather trilogy. From the very beginning, he lived inside one of Hollywood's most powerful family shadows. He wanted to succeed completely on his own terms and on nobody else's reputation. At 17, he legally changed his surname to Cage to escape the Coppola name entirely. That single act of self-reinvention told you everything about how he approached his entire life. He studied acting with a ferocity and commitment that separated him clearly from his peers. In 1984, he had 2 of his own teeth removed for realism in a film. He was not performing characters, he was physically becoming them at any personal cost. In 1996, he won the Best Actor Academy Award for his work in Leaving Las Vegas. That Oscar completely transformed his market value and his complicated relationship with money. Hollywood began writing 9-figure checks, and Nicolas Cage accepted every single one of them. Between 1996 and 1997 alone, he starred in The Rock, Con Air, and Face Off. Each of those 3 films was a massive global hit that made his name untouchable. He commanded $20 million per picture, sometimes significantly more than that. By the early 2000s, his estimated net worth had reached $150 million. The spending began gradually and then accelerated in ways that stunned even industry observers closely. At his peak, he owned 15 separate properties across the United States and across Europe. He purchased Schloss Niedstein, a medieval Bavarian castle deep in southern Germany's rural countryside. He also purchased a second medieval castle, this one located in the English countryside. He bought an uninhabited private island in the Bahamas entirely for his own exclusive use. He acquired the La Laurie Mansion in New Orleans, one of America's most storied haunted properties. He commissioned a 9-foot-tall personal pyramid tomb inside a famous New Orleans cemetery. 4 yachts, a Gulfstream private jet, and a fleet of more than 50 cars. He acquired 2 live albino king cobras and kept other exotic animals at his properties. He purchased a rare first-edition Superman comic book for $150,000. He bought shrunken pygmy heads, a live octopus, and various other deeply unusual collectibles. Then, in 2007, he outbid Leonardo DiCaprio to buy a real dinosaur skull at auction. He paid $276,000 for the Tarbosaurus bataar skull itself. The skull was approximately 70 million years old, pulled from Mongolia's ancient Gobi Desert. His business manager would later state Cage required $30 million per year to break even. None of this felt irrational because the money truly never stopped arriving in his accounts. But here is exactly where the foundation of everything he had built began cracking quietly. The United States housing market began its catastrophic, historic financial collapse starting in 2007. Cage had mortgaged many of his 15 properties to help sustain his ongoing lifestyle demands. When property values fell sharply, those mortgage obligations did not fall with them at all. He was overexposed in a collapsing real estate market with no meaningful cash reserves available. Simultaneously, the Internal Revenue Service had quietly been building a serious case of its own. Cage had entrusted one man, Samuel Levin, with total control over his finances. Levin managed his investments, his property acquisitions, his tax filings, and his daily spending decisions. In October 2009, Cage filed a $20 million lawsuit against Levin in Los Angeles Superior Court. He claimed Levin had placed him in bad real estate and failed to pay taxes. Levin countersued, arguing he had repeatedly warned Cage about his destructive and compulsive spending habits. Levin claimed Cage was already deep in debt before their professional relationship ever truly began. Courts would eventually find elements of truth on both sides of that uncomfortable, complex argument. The IRS liens, when fully calculated, came to approximately $14 million in back taxes. That figure, combined with his mortgage debt and legal costs, made the situation genuinely catastrophic. What happened next shocked almost everyone who had admired this man's remarkable career and success. Beginning in 2009, the systematic liquidation of Nicolas Cage's extraordinary empire began in full. Schloss Niedstein, the Bavarian castle, was sold off under conditions of significant financial distress. His English castle was also sold, and his private Bahamian island followed not long after. The LaLaurie mansion was eventually sold at a significant and painful loss under financial pressure. His Las Vegas estate was listed at roughly half its peak value and sold quickly. Multiple American properties were foreclosed on or sold at enormous losses throughout this period. Then the dinosaur skull created a final, completely unexpected complication that nobody had anticipated at all. In 2014, the Department of Homeland Security informed Cage the skull had been smuggled illegally. It had been illegally removed from Mongolia's Gobi Desert before Cage ever purchased it himself. Cage had not known. He had received a certificate of authenticity from the gallery. He was not accused of any wrongdoing, but he was still required to return the skull. In 2015, he handed the fossil to the U.S. government, receiving $0 in return. The skull he had paid nearly $300,000 for was simply taken back. With no refund, no insurance, and no reimbursement. It was simply gone. For nothing. Professionally, the collapse fundamentally transformed what this actor was now willing or forced to accept. Before the financial collapse, Cage was one of the most selective actors in Hollywood. After it, he accepted nearly every significant role that any studio offered him whatsoever. Between 2009 and 2012, he appeared in 14 films of dramatically and visibly varying quality. Critics and longtime fans recognized the shift immediately. The artist had become something very different. He was no longer selecting films for legacy, he was taking them to service debts. Rock bottom looked like this: a celebrated actor reduced to working primarily for the IRS. The castles were gone, the island was gone, and the empire was essentially completely erased. This is the part of this story that most financial observers never take seriously enough. 3 specific and deeply repeatable patterns emerge when this story is studied with real honesty. The first is what experts call lifestyle inflation, without any fixed ceiling or established boundary. Every increase in Cage's income was matched immediately by an equivalent increase in his spending. There was never a single moment where he declared enough and simply stopped acquiring more things. That missing ceiling was the silent mechanism that made his eventual financial collapse almost completely inevitable. The second pattern is the extreme danger of total single-point financial delegation and complete dependency. Every decision, investments, taxes, real estate, ran through exactly one single human being. When that single point failed, every financial decision Cage had ever trusted was compromised simultaneously. The third pattern is the most psychologically interesting and perhaps the most universally relatable one. Cage was never simply buying luxury. He was constructing and carefully maintaining a specific identity. The castles, the skull, the cobras, each purchase was one more brick in that structure. When the money ran out, the identity it had built collapsed completely and quietly alongside it. Most people watching this will never bid on a prehistoric skull or purchase a European castle. But most people do spend money to maintain an identity that someone else originally assigned them. The question genuinely worth sitting with is simple, personal, and a little bit deeply uncomfortable. Are you building real, lasting security or funding an identity that will always demand more feeding? Nicolas Cage did not disappear. He worked through his obligations steadily, film by film. He accepted role after role until the IRS obligations were substantially reduced and largely cleared.
By the early 2020s, reports indicated he had resolved the majority of his major financial obligations. He still, to this day, owns a 9-foot pyramid tomb waiting in a New Orleans cemetery. Perhaps that strange pyramid is the most fitting ending to this very specific American story. He lost a private island and somehow managed to hold on to a private pyramid. Only in America. The thought this story leaves behind is genuinely worth carrying with you going forward today. Wealth is not what you accumulate. It is what survives when the income finally stops. If this story changed the way you see your own money, please share it today. Share it with someone who needs to truly understand what the word enough actually means.